The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in. This week, we've pulled together quite a range of global news and, well, some critical insights, all distilled for hotel industry leaders like you. It feels like a really dynamic period right now. Understanding these shifts seems key.
It absolutely is. I mean, the hotel landscape, it's evolving so quickly. Our mission today, really, is to cut through the noise, offer not just what's happening, but crucially, why it matters for your strategic thinking, for those decisions you have to make. We're looking for that actionable intelligence, the stuff that helps you stay ahead.
Okay, let's jump right into some of the big developments then. Strategic expansions happening across continents. It paints a pretty clear picture of, well, dynamic growth. Let's start in Fiji. A truly landmark project, Kerzner International partnering with BSP Life, planning Fiji's very first one and only resort and private homes. This isn't just another luxury opening, is it?
No, far from it. Yeah, this is significant. It's slated for 2029 on this amazing 127-acre site in the Asawa Islands. We're talking 40 luxury accommodations, 6 dining venues, wellness center, and, importantly, 20 private residences. They'll be up for sale from November 2025. But the really insightful part here, I think, is the strategy behind it. BSP Life is emphasizing this deliberate blend, traditional Fijian design with contemporary luxury.
Right, that blend.
It's not just about looks. It feels like a very shrewd move. So many high net worth travelers, they're actively seeking that authentic cultural immersion now, alongside the comfort. By weaving in the local heritage so deeply, Kerzner and BSP Life, they're creating a unique selling point, sure, but maybe also future-proofing the resort against sort of generic luxury trends. That's a powerful lesson, I think, for other developers looking at emerging markets.
That is a fantastic point, that localized strategy elevating a global brand. Does this kind of ultra-luxury focus, though, does it risk maybe neglecting other market segments? Or is it purely about lifting Fiji's overall premium image, attracting more high-end investment?
It's definitely a statement piece aimed at lifting that whole profile. You're right. It signals to the world, hey, Fiji is a serious player in ultra-luxury. And that often creates a kind of halo effect, doesn't it? It attracts other premium brands, other investment. It's less about ignoring other segments directly, more about setting a new benchmark.
Okay, that makes sense. Absolutely. Now, let's shift gears over to Asia. Mandarin Oriental making a big entry into South Korea. A new luxury hotel in Seoul, set for 2030, 128 rooms and suites right in the central business district.
Yeah, and this move by Mandarin Oriental, it feels indicative of a much broader, maybe more aggressive expansion strategy across Asia. Look at Lotte Holdings, for example. They're planned for Japan. 20 hotels, 4,500 rooms by 2034. That's ambitious.
Wow.
It's all under their new subsidiary, Lotte Hotels Japan. What these developments really tell us, I think, is that despite global economic jitters, the major players see serious long-term high-yield growth potential in key Asian cities and resort spots. They're investing now in scale and brand presence, anticipating that future demand.
And speaking of interesting investment strategies in Japan, Hyatt, Kyoraku Inc., and Takenaka Corporation have closed the Atona Impact Fund. This one is laser-focused on developing modern luxury hot spring ryokan hotels across Japan, typically smaller, 30 to 50 guest rooms each.
Right, and what's really notable about this initiative is how it embraces the ryokan concept itself. It's so culturally specific, isn't it? Intimate, highly experiential.
Like it's different.
Exactly. While the big brands expand in the urban centers, this fund is tapping into that desire for authentic, high-end Japanese experiences, often outside the main cities. For you listening, this really highlights the growing potential, maybe profitability, of niche experience-driven luxury that leverages local heritage. It's not just building another standard hotel, it's about creating unique stories for travelers.
That is a clever way to differentiate. Definitely. We're also seeing some major strategic partnerships shaking up brand presence. Hilton and YTL Hotels, they've expanded their alliance. New deals in Thailand and Japan. This brings the LXR Hotels and Resorts brand to Thailand Royal Phuket, 275 rooms, beachfront by 2027. And for Japan, Tapestry Collection by Hilton debuts with the Greenleaf Niseko Village, a 200-room conversion. Plus, Kasara Niseko Village becomes an 8-villa LXR conversion. All the Japan ones are set for year-end, I believe.
That's right. And what really stands out there, especially in Japan, is the strategic clustering. It's all within the Niseko Village ski resort.
Right.
This isn't accidental. It's a direct play to capture that booming adventure tourism market, which has shown incredible resilience, incredible growth. Hinode Hills Niseko Village is also joining Hilton's Curio collection, their second in Japan. This partnership, it just powerfully leverages Hilton's global distribution, their loyalty program, allowing YTL to unlock significant international visitor appeal. So the takeaway for you, the power of strategic location combined with brand synergy. Find that niche, then deploy a global brand to really maximize its reach.
Smart. Okay, from those big international brand plays, let's pivot slightly to brand transitions, particularly in Australia. Accor has signed an agreement with Eleanor Investors Group and 1834 Hotels, 4 properties transitioning to Accor brands next month.
Yeah, and these are significant rebrands. It highlights that ongoing consolidation trend we keep seeing. Byron Bay Hotel and Apartments becomes the Siebel Byron Bay. That marks Accor's strong return to Byron, which is interesting. Barossa Oriental goes to Mercure Barossa Valley. Clare Country Club becomes Pepper's Clare Valley. And Adabco Boutique Hotel Adelaide transitions to Mantra Wakefield Adelaide. Pepper's Clare Valley and Mantra Wakefield are also getting refurbs to bring them up to brand standard.
Okay.
The crucial insight here for hoteliers, I think, is just the undeniable power of connecting to a major brand's ecosystem. Their global distribution, their loyalty program like All Accor. It's just becoming tougher and tougher, isn't it, for independent properties to compete on reach and marketing without that kind of backing.
It does raise that question, doesn't it? Does this mean the era of the truly independent hotel is shrinking, or is there still plenty of room, maybe for those catering to an even more specific, non-branded niche?
It definitely poses challenges for independents. Look, there will always be a market for unique boutique experiences, absolutely. But that competitive advantage of global distribution, the loyalty programs, it's immense. Independents, they just have to work harder, smarter maybe, to differentiate, build those direct relationships, often leveraging technology themselves to try and compete with the giants.
That's a critical point, something to really consider. And quickly on the acquisition front, IFM Investors acquired Curtain Exchange from Infrared Capital Partners. It's a mixed-use development, includes over 2,000 student accommodation beds, PBSA, and the 60-key Nasuto Curtain Perth Hotel, plus retail.
Yeah, this acquisition really underscores that growing trend of integrated mixed-use developments, especially combining hospitality with student accommodation. It's a recognition of the stability, the strong demand in that PBSA sector, which we'll touch on again shortly, providing a pretty solid anchor for the hotel part.
Okay, so we've covered a lot on expansion. Let's shift now. What do these market dynamics, these performance insights, actually mean for hotel leaders trying to navigate Australia's currents right now?
Well, a recent Horwath HTL report gives a pretty valuable outlook for 10 key Australian city markets, looking ahead to June 2025. It uses data from Deloitte, STR, Tourism Research Australia. It flags a 2.6% year-on-year dip in domestic visitor nights, though they add a note of caution about methodological changes there.
Okay.
And international visitor arrivals recovering slower than expected, growing only 2.8% versus a forecast of 11.1%. What this slower recovery might indicate is, well, perhaps a shift in consumer behavior, or just a longer tail on the return to pre-COVID travel patterns. For you as leaders, this really signals a critical need to perhaps reevaluate target markets, adapt marketing strategies, don't assume things are back to normal.
Right. Despite that, Sydney's still holding strong, the top performer. But we are seeing supply constraints hitting occupancy recovery in other key cities. Melbourne, Adelaide, Hobart mentioned.
Indeed. And the year-to-date RevPAR growth, it's quite mixed. Canberra, Gold Coast, Sunshine Coast have seen declines, partly due to ADR drops, partly external factors like Cyclone Alfred, which is a stark reminder, isn't it? I mean, even the best plans can be hit by external events.
Absolutely.
But Brisbane, Hobart, and Perth, strong RevPAR growth there. The 5-year outlook, looking out to December 2029, it expects moderated RevPAR growth overall. The key takeaway here for leaders, I'd say, is agility. Understanding local market conditions, external events, they can dramatically skew performance. Having contingency plans is just crucial.
Okay, agility is key. Now, speaking of significant market shifts, Australia is facing a really eye-opening shortfall in purpose-built student accommodation, PBSA. 180,000 beds needed. We're talking 25,000 extra beds needed just in Sydney, 10,000 in Melbourne. Currently, only, 6% of students have access to suitable housing there? That's staggering.
It is staggering. And that shortage is precisely why we're seeing such strong investor interest in the PBSA sector. It's simple supply and demand, really.
Yeah.
Robust rental growth, consistently high occupancy rates. Those are the drivers. Median PBSA studio rents, say in Sydney and Melbourne, grew at a 5.5% compound annual rate between 2018 and 2024. That's healthy.
Very healthy.
So this isn't just a housing issue, it's a massive investment opportunity. And with limited existing stock up for grabs, the focus is really shifting towards development opportunities, especially in those core education areas. It signals continued expansion, potentially a golden age for this specific asset class.
Fascinating. Turning back to Sydney specifically, their hotels had a record-breaking August, boosted significantly by big events like the Sydney Marathon, the British and Irish Lions Tour, a great example of event tourism power.
Absolutely. The CoStar data for August shows Sydney hotels were, as you said, firing on all cylinders. Occupancy hit 84.4%. That's almost a 9% jump year on year. ADR up nearly 15% to AU $285.71. Driving RevPAR up almost 25% to AU $241.18.
Yeah.
Huge numbers. Performance peaked on August 30th, the eve of the marathon. Get this, 95.1% occupancy and an ADR of AU $440.96.
Incredible.
What this tells us is Sydney isn't just getting more guests, it's commanding premium prices. Demand is clearly very strong. And, Sydney's growing reputation, now 7th in the Marathon Series globally, that's clearly pulling in significant numbers, domestic and international. And they're spending money.
Definitely. And it's great to see regional areas getting recognition, too. Park Royal Parramatta won the campaign award at the Western Sydney Tourism Awards for boosting regional appeal after their big refurbishments. Shows that investment outside the main CBD really can pay off.
It absolutely does. And if we connect this to the bigger picture, maybe look at Metro Manila. Colliers Philippines is reporting that foreign hotel brands are projected to make up 56% of new room supply there between 2025 and 2027. That's a big jump from their earlier 42% projection.
It is.
So new infrastructure is clearly attracting investors, even with maybe a slight dip in tourist arrivals recently. We're seeing examples like Ascot, Didi Meridian Park, Dusit Green Hills, Manila, Mandarin Oriental expanding there. It really signals that infrastructure investment can be a more powerful magnet for hotel development than perhaps short-term tourist arrival numbers, especially in dynamic emerging markets.
Interesting dynamic. Okay, let's transition now from market performance to innovation and that all-important human element in hospitality, starting with a pretty significant shift in how staff are being recognized, rewarded. A report from Canary Technologies showing a threefold year-over-year increase in digital tips for hotel staff. And nearly 70% of those tips are going directly to housekeepers.
Yeah, this is a really crucial development. It goes way beyond just more earnings, so that's important. It significantly boosts morale, job satisfaction, that sense of recognition for these essential teams who are often, frankly, overlooked.
Sure.
The data shows 62% of guests actually leave personalized thank you messages with the tip. And the highest single tip recorded was $600.
Wow.
Digital tipping is also tangibly improving guest service scores, they found, by 7–10%. Reducing staff turnover potentially up to 75%, enhancing employee engagement overall. So for you as leaders, the takeaway seems pretty clear. As cash tips decline, adopting user-friendly digital tipping isn't just a nice-to-have perk. It's becoming maybe an indispensable tool for staff retention, for elevating service quality. It's really an investment in your people, your most valuable asset.
That's a huge impact, a clear ROI there. But as hotels upgrade with more tech, there seems to be this balancing act, right? Between cutting-edge features and, well, the guest experience. Hotels.com's 2025 Hotel Room Insights survey found that while hotels are putting in smart tech, AI concierges, smart mirrors, robot butlers, even guest confusion is a real challenge.
Precisely. The survey found over half of hotels now offer verbal tech walkthroughs at check-in to try and combat this, which, let's be honest, can feel a bit like homework for a guest just arriving.
Yeah, not ideal.
The focus often leans towards comfort tech, things guests actually find useful, like smart TVs, energy-saving systems, mobile check-in out, rather than just novelty tech. And this raises a really important question for all of us in the industry. 70% of guests still prefer human interaction for check-in and support.
70%, that's high.
It is.
Sure.
So while we see these cool bathroom innovations, smart mirrors, motion sensor showers, and look ahead to AI concierges, biometric access, that human touch remains incredibly vital. The challenge is integrating tech seamlessly, not just for tech's sake, but to genuinely enhance the experience without making guests feel lost or like they need an instruction manual.
It's that delicate balance, isn't it? Convenience versus complexity. And speaking of the human element, we've also seen some significant talent movement recently. Stars in motion, the industry never stands still.
No, it doesn't. And what's striking about these moves isn't just the individual names, but maybe the underlying trends it hints at. For instance, seeing quite a few executive assistant manager and general manager roles being filled, like Shale Budd at Quest Newquay, Jove Machevsky at TFE, Adam Whitley at EVT, and Ann Nair at Minor Hotels ANZ, David Wayne at Parmelia Hilton Perth. It suggests maybe a renewed focus on operational excellence, on strong, on-the-ground leadership as the industry stabilizes and grows.
Makes sense.
And similarly, appointments like Zoe Sanson as operations manager at Accor, Paula Tanis moving up at Accor Pacific, Peter Manatzis taking the GM role at Hannah soon for TFE, Haley Seymour at Crystalbrook Kingsley. It highlights the value placed on robust internal talent development and succession planning, which is a critical area every leader should be thinking about in their own organization, right?
Absolutely.
It reflects a healthy, growing industry investing in its leadership pipeline.
So wrapping this up, as leaders in the hotel industry, what does all this mean for you? We've touched on rapid global expansion, detailed market performance shifts, the surprising rise of digital tipping, that double-edged sword of smart room tech. It seems clear that technology adoption is speeding up, yet that fundamental need for genuine human connection, for a seamless guest experience, it remains absolutely paramount.
That's the critical point, isn't it?
Yeah.
As hotels embrace more and more advanced technology, the question we have to keep asking ourselves is, how do we ensure it truly enhances the guest experience? Without overwhelming people, without alienating them, and maybe even more importantly, how do we empower our staff? Empower them to be that ultimate human interface, that empathetic guide within an increasingly smart hotel environment. That's a thought worth mulling over, I think, for everyone listening.
That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. It's a must-listen for anyone passionate about elevating their guest experience and driving innovation in the hotel world. Until next time, stay well and stay ahead. See you next week.